And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the NASDAQ 100, the NQ, on Monday, May 3rd, 2021. Kind of a wild market today, to be honest with you. We continued to work our way lower, but not before we saw some strong buying, which took the market back up just past our resistance level at 13,926. And then the market just decided to turn and plunge, which is within expectations of what I was looking for today. I was looking for it to move below 13,812, which up to this point had really held all of the declines. And it kind of flew right through that, went down to our lows at 13,772, and then kind of got stuck in a range. Now, what I have done is I continue to feel that we are in a minor fourth wave correction overall within the NASDAQ. And within that, we have completed the internal A wave, the B wave, and now we're on the internal C wave, excuse me, to complete minor wave 4. And we now, all C waves are always going to be 5 waves, so the 5-wave structures. And this wave 1 was our initial decline off of the existing all-time high at 14,064. And then I had left open the possibility that we would continue higher, either come up to this level, possibly a little bit higher, and that's where I would put the completion for the subminuet wave 2, or subminute wave 2. And that did not happen. It got close, but did not happen. So that, I believe, was the completion point up here, which would have been last Thursday's level at 13,778, 76.25, and now has started to form the third wave within this C wave down. It is sloppy. This is a 30-minute chart, but I just wanted to show you, if I could say that this is the wave 1 of 3, this is wave 2 of 3, and now we're in 3 of 3. It fits, but I don't like the structure. I don't like the sloppiness of this wave pattern. But that may be what we get. So I'm going to go with it thus far until the market proves me otherwise. And right now, so I'm going to continue to look for that drop down to 13,707, 708. And that, I believe, could be the endpoint for wave 3. And then we get a little bit of a rally in a fourth wave correction. And then we get the continuing decline. And that would then bring us into levels that we are looking for to contain the minor wave 4, complete it, and set the stage for the minor wave 5 rally, which would then move up to complete that larger rally, which has been in progress for some time. And we are looking for the cycle wave 3 to be complete. And now we just update that longer term picture. I'm going to go out at least to the weekly so that we can see that we are counting a primary 5th wave to complete the cycle wave 3. And within that primary wave 5, we have what is best labeled as wave 1, 2, 3, and 4 in place. And that would suggest that we are still within the primary wave 5 up. And within that, we've gotten all of our, and excuse me, we're in the primary wave 5 and within intermediate wave 5 within that structure. And within that intermediate wave 5, we have completed minor waves 3, 1 through 3, and now we're in the 4th. So this would be, once this is complete and we start to rally again in minor wave 5, that's going to complete the intermediate wave 5, the primary wave 5, and in turn, the cycle wave 3. And that's going to set the stage for a much larger correction to take place. So while we still have upside to do, what will follow will crush all of it in terms, and should take quite some time to unfold. So we're ending a long-term rally phase or an advance, and it's going to yield to a slightly larger, longer-term corrective phase, which will consist of an A wave down, a B wave up, and then a C wave down. Now, corrective patterns can take many, many different shapes. And once we arrive at that level, and we're going to begin, I will go into more detail into what we can expect and what levels we can look at. But right now, we're still focused on completing this little minor third wave, which is taking its time. And right in the middle of all this corrective phase, we've had the earnings season, and earnings season remains. And I had talked about that I would kind of take a look at my calendar to see what's left and what could probably push the market. Well, tomorrow, the only ones I think that might be able to push the market are Activision Blizzard, and they're reporting after the close tomorrow. They tend to be more volatile than the S&P on reporting, and so that could have some pressure on the NASDAQ in either direction. And then we also have Virgin Galactic Holdings tomorrow, and that also can be much more volatile than the S&P, and so that could have an effect on aftermarket. But we might get some some during the market hours as people begin to decide what they're going to do about what the earnings may or may not be. So those two for tomorrow could really put some effect on the market. Now, on Wednesday, the 5th, we have PayPal, we have Wynn Resorts, and Lyft, and Etsy. Now, and Peloton, really, and Peloton is the one that's been in the news. They've suffered. They've really had some problems. They've taken a nosedive. I don't know. That's all now baked into the price. Anything bad that's going to come out has been baked into the price. I have no idea. But they're reporting on Wednesday. So we still can have some fireworks here, and to both the upside and the downside, because we're not sure. But in this case, because I'm continuing to look for the decline to come into fruition and finish, I'm going to say that our surprises may be to the downside. So having said all that, let's take a look at what we think could be going on. I'm going to go back to the 30-minute chart because it really shows these internals, which are not really pretty. And again, I'm going to go down one more so I can see the internals of this little correction down here. Now, we could have completed, and this could be 4, and we could be starting lower in that wave 5, and or just the wave 5 of 3 for that matter. And we need to then take a look at, probably if this smaller wave 3 is going to extend further, we could get ourselves down to 13,707. And that truly is about 75, 79 points from where we are right now. And the way the NASDAQ can move around should not be a problem. So I'm going to continue to look at 3,707 or that area to put in the low of the third wave, as we've been discussing yesterday and again today. And then that should produce a smaller, but still probably tradable rally, but in a 4th wave. Then we're going to get that 5th wave. And again, with surprises or disappointments that may be coming with the balance of earnings and the general feel in the market, we may just see it come down and get itself into our zones. Again, we're looking at 13,625 And then we have 13,572-ish. And that zone, which begins at 13,625, runs all the way down to basically 13,490 to 13,450. That's the zone that I think the market's going to get to. Does not have to be written in stone. And again, we continue to allow the market to tell us, but that seems to be a very logical area for the market to complete this particular minor wave 4. Can it do it here? Absolutely. It's putting in a new low. And if the structure is complete, then that's where that would be fine. And also, can it finish here? Yes. Ultimately, though, I think that we might get down here. It's not cast in stone. And so we're going to be continuing to follow structure, Fibonacci. And then, of course, as anything moves off of that, where our moving averages come in. And if upside were to pick up from here, it would be tough. And I think it should be very limited. But if we start to break above this 618 level again, which is 13,843-ish, and we start breaking above, these are the hourly chart, if we start breaking above the hourly 50, which right now is at 13,872, then we could see this all finished. And now we're going to start pushing higher again. I'm not really expecting that, but if the market should do it, and then we're going to allow the market to tell us what its intent is, and we'll trade what's in front of us. So we have the resistance levels there, and they should continue. And again, this would stay in place, and this would stay in place until they're broken sufficiently and giving us clues that we're going to new highs again, which means basically that the whole minor wave 4 is going to end in a failure. Because there's basically, in my mind, no other way to count this other than corrective. And if it only gets down to here, it could be a failure. And so we're all going to bear that in mind. Upside, I believe, should be limited tomorrow, but then I felt that for today. And we didn't go further than I anticipated. I had stated that we might get to 13,978. And we got within earshot of it and then failed. So we have to leave those possibilities open still. And that's where I'm going to leave it for today. Remember, trade what's in front of you. Use your moving averages. Use the Fibonacci. Do Fibonacci's intraday on your 1, 2, and 5 minute charts. That's going to help keep you in line to what's happening in front of you and give you an estimate or a guide to what potentially lies ahead and where moves can happen. And our next update will be on Tuesday, May 4th.